Life moves fast, and so does your career. You've built a successful path, but now it's time to diversify your investments and secure your financial future. Introducing The Prestige, your trustworthy, vetted partner in commercial real estate investing. We understand that you're time-starved with a family to care for and a demanding career to navigate. Not only sheltering, but safely multiplying your returns in a hard asset, which does not walk away. You can drive by it anytime. At The Prestige, we specialize in serving professionals like you who seek safe and secure investments without the burden of becoming an expert in commercial real estate. With over 400 years of combined experience, our team of seasoned experts is here to guide you towards high return, high yield investments in a low yield market. We meticulously analyze market trends, assess potential risks, and identify lucrative opportunities, ensuring your investment portfolio is optimized for growth and stability. Here's a few of our client testimonials. Wow, DL, this is so exciting. I'm so happy for you and for us. Very exciting, and love the floor plans. We've got our distribution pending in our bank account. Thank you so much, DL. DL, we can set our watch to your distributions. Never missed a payment. Don't let time constraints hold you back from maximizing your investments. Visit The Prestige at mayhill.com today for our current and rare investment opportunity, and let us leverage our expertise to secure your future. DL began in commercial real estate in 2005 and is one of the top seasoned leaders in investing and developing in Southern California and Dallas, Texas. And there is no slowing down. The Prestige, your partner in commercial real estate investing.
Thank you, everybody, for coming. We appreciate your time. We know that you've had a long day and travel and everything that has gone on. We're going to just give you an overview of what we're doing and take about 15 minutes, not too long, but happy to have had you guys introduce yourselves as well. And so we appreciate it. So as you know, I'm DL Campbell, and my background is 30 years in IT and in engineering for companies like Lockheed Martin, Northrop Grumman, and I worked for the Army. So I came out of the corporate world as an engineer, and 20 years of commercial real estate. You know Warren, he has over 33 years in planning in big cities like Dallas and Tampa. Right, so we'll just give you a little overview of what we're doing and what the opportunities are. And then if you guys want to get back together next week and do a Zoom, we're happy to give you all access into our Dropbox. I wouldn't give it out because the project is not being shopped and the project is not in trouble. So we're just being very careful who we place this with. So Warren, did you have anything that you wanted to say to kick off a little presentation?
Just glad to have you, and we're excited about the project, and we're soon, with the next couple of months, hoping to break ground, and we're very excited about that. We'll work with our teams very diligently and just making sure that we meet our deadlines. So
great, thanks. Yeah. I specifically skipped my introduction because I knew we were going to do this. And I do have over 20 years of commercial real estate experience. It has been in all different asset classes. I never did any single family. I started with my first property being a 16-plex. So that was a great introduction to commercial. I've raised about $12 million in private money right now for our projects. So in my first project, I actually forced about 80% vacancy, forced out all the drugs and the crime and all that stuff. We did the renovation. I doubled the property value in the first year. So this may be a little hard to see, but you can see that it's addresses, properties that I've worked on or owned. And my transaction list is fairly extensive. Did this over the last couple weeks for Jessica.
Yes.
And the transactions added up to about 355 million in transactions, and I was only able to find about 70% probably of my work, and over 10 million square feet of assets. So starting with the bottom, that would have been a storage conversion in Los Angeles to my first commercial property, 16 units. And then we worked on development to add another 78 units to a contiguous property by the 16 units. We worked on bank-owned properties to flip them, including a huge shopping mall in Plano. So just a lot of different work, phase value engineering, portfolio evaluations of industrial, heavy industrial, light industrial, planned communities, all kinds of property types. So I want to introduce, some of you guys have met Kobe Hanai, and he is our co-developer for the apartments. He has over 1,500 transactions in townhomes, planned development. He's done rehab on commercial multifamily as well. And he's been working in real estate for over 30 years. And he's also here with his team. So if you talk to Kobe, he is looking for some refi in some single families, a ground up of a duplex, and also looking for funding for 30,000 square foot retail in Nashville. He has a portfolio of 41 fix and flips in Chattanooga, which is really growing right now. So those are his funding needs. Then we come to Warren. Go ahead,
Warren.
please.
Well, as I mentioned earlier,
All right, the crowd goes wild.
35 years of planning experience, architecture degree from University of Florida. I guess 6+ years as a community planner in Hillsborough County City Planning Commission. That's where I got my first start in Tampa, understanding what planning is and various facets of the planning industry and skill base before moving to Dallas, where about 24+ years doing various types of neighborhood planning and into zoning, where in 2018, that's when I retired. And then again, did some other things, and I'm with DL on her team working on this project. I look older than I look.
Well, actually, I was going to say the reverse. Like, how did you work 35 years? I mean, you started
I'll be
10?
I know.
Like, you started 10?
Yeah,
I'll be 63 next Tuesday.
Oh my God, you don't look a day.
Okay, so I'm going to ask the question
okay.
for all the ladies in this
Oh
room.
my God.
Afterwards, we need your skincare routine.
What cream do you use?
Yes. Healthy
Oh
living.
my God,
Right.
you look
Good genes.
wow.
Yes.
Thank you.
Wow.
Yes.
Biotech opportunity.
And you have an investor. There you go. Skincare line.
Wow, no, it's
Yes.
Great.
So I'm very
Great
blessed.
genes.
Very blessed. Thank you. Some of the things that I worked on at the onset of working with DL at the project at the beginning, in terms of problem solving, like DL said, because I did basically in terms of planning with entitlements, zoning, and knowing how to maneuver through the city process. So as I came on board, I assisted with that, but DL asked me to expand my scope of work and roles, and when certain things we had some concerns with or had some roadblocks, she asked me to help out and move through that. So one of the roadblocks that we did have with our geotech, we did hire a geotech initially because of the time frame where we had to get certain things done on site. They could not perform the scope of work that we asked in a timely manner. So I had to fortunately find another geotech, and they were able to do that. We also worked with the city in terms of the fencing requirements to get done, so the geotech and their equipment can move through so they can do the actual borings of the site, which was very challenging at one point because the equipment initially was too large, so they had to find a smaller equipment to get through, where we basically, when we worked with the city arborists to maneuver working the boring, that was a little challenging, but we did get it done. In addition to that, there were some issues where certain subcontractor couldn't go out to mark the boring, so to speak. So I was tasked to basically look at the tree survey, find out where those borings were, identify where the trees were, and then mark the borings based off of that. So that was a challenge in terms of walking the 23-acre site to do that. And moving forward, in terms of the easement, initially we were looking at having our sanitation sewer as well as our stormwater easement, and we had issues with taking our stormwater easement through initial property to the north. Initially, we were able to. They said we can do it, but as we went through the corporate said no. So we were going back and forth. So we looked at adjacent property to the east of the site, which had a golf course. We found that was going to be problematic as well. So we ended up on the site, as you saw in terms of the plans, we put a detention pond. We had our civil to size the development, phase 1 and phase 2, to accommodate the detention pond for the stormwater runoff. But for the wastewater, we're going to tap into the city line that runs adjacent to the site. So those are some of the things that I worked with. And a couple other things. Yes?
I have a question. So are all the roads already like pretty much set and towards the development, like the site?
The site has two major thoroughfares, or it has Edwards Road, which is a 2-lane undivided road that's on the southern border. Then you have that wraps around, as we call it, the boat. The city did some realignment, so it wraps around to the furthest west of the property and going around closer to the north of the site. So those are the two roadways that runs that goes into the site. Correct. So
and is there like a horizontal property regime where you get the perks of having as well more of a construction development where they take that as a factor?
Right.
You're using the lot itself as rezoning.
The lot has been rezoned, so it basically can go with multifamily as well as condos and things of that nature. So that was a plus in terms of the height of the zones, where we can go maximum 66 stories before we can ask for an SUP to go up higher. So when our GC goes out there to remove the trees and do all of that and do the grading, we do have some issues that we did resolve. I think DL is going to probably talk about that in terms of the initial development. We did resolve that in terms of it had some underground parking. So we got that removed, so therefore it was a savings of over $2 million in that. So we found additional off-street parking to accommodate the multifamily, which is about 66 spaces. So we worked very diligently with our civil as well as our architects to make sure that we accommodate those.
And so this is why we don't have a team of 10 co-GPs with 3 years of experience like the syndicators do. We have professionals. We have, Warren with 33 years of planning and that problem-solving skill set. We have one of the biggest civils in the state of Texas that also does landscape architecture and environmental engineering. So our team has a lot of depth, over 400 years of commercial and construction experience. That sets us apart because you're always going to have challenges with properties no matter what it is, but if you have the right team and you can figure it out, then we can get through a very hard problem in about an hour with the right people around the table. So it's very important to distinguish us from the syndicators. We're owners, we're solving the problems, and we have consultants that are well able and educated to solve these hard problems quickly.
And we basically have weekly meetings with our team to make sure that we are on track with resolving whatever concerns or issues that may develop or pop up, or answering whatever the city's asking in terms of what we have to resolve that they feel comfortable with, that meets code and meets certain standards and requirements to meet the city code. So, and we're in the process of doing that and resolving those issues. A couple other things I was tasked with because of my experience in the planning field is working on the building permit fees. Each city that you probably are aware of have basically a criteria in terms of what's involved. So basically we had to go through to make sure that the evaluation of the project meets a certain cost, in which will be verified and looked at once all that's taken care of at the city. And then just go through the fee schedule, put that schedule together, And then we had our construction project manager just go through it just to verify that the numbers were correct, and they didn't see any issues based off of that. They thought it was fine. And then lastly, we're working very diligently with our architects, their plans, building plans and things of that nature, just to make sure that the numbers and the various schedules, like the window schedule, door schedule, and the numbering of the rooms are right in terms of the mixed matrix of the complex is
So a lot of
great.
analysis, a lot of validating
Yes.
amongst the members of the team, but we do have our building permit for 226 units right now. We have another 120 Class A++ units coming, and so we could build it like we have it right now, but we took a step back. We removed the last 2 underground parking garages that saved $2 million in our building costs. Bless you. So it was worth it to take a little step back, work with our contractor, work with our civil and architect to remove those parking garages, shift some storm drains, shift some utilities and some grading, and remove those $2 million of underground parking and shift it to surface parking. So that was a little bit technical of an explanation, but this is what we do. And it's important to know that we're just not selling the deal to get a fee, but we actually are working it. We picked up a property that was $6.2 million, and we put the entitlements on it for bringing it to a valuation of $13.3 million. Now we have our permit and our plat, and it's worth about $16 million, where we have equity in our project. It's different. You know, we have equity and we continue to build value, raise capital and build value. So very different from a lot of projects that you're seeing come across your desk. But I think probably the most important slide is, you know, if you're looking at your clients or your lenders, what is their why? You know, if some of us are working with direct lenders or equity partners, what is their why? They have a why. If it's a retail investor, do they want to spend more time with family or spend more time vacationing? There has to be some kind of result. Or if it's a debt partner, you know, even debt partners have a why. Why are you here at FactRight? Why are your partners here? What do they want out of this time that we're investing, where we could be in Spain or we could be in the Bahamas or wherever we wanted to be? But our partners and our investors have a why, and if we're hitting that why, even to the point where we're getting that eye roll, or we're getting the, you know, okay, now we know that we have hit that why enough that we're getting some kind of a physical response. So we need to look at this. A lot of people have a 401k, and you know the recent regulation that shifted. Now it doesn't have to be a former employer's 401k. They can put a current 401k to work. And that's a huge advantage, to be able to take your current 401k and self-direct it. So we have a lot of people coming in that way. So we have over 150 videos on YouTube at honorsyoutube.com, and we address some of these points. So we address the market, the submarket, Dallas, our submarket of Denton. We address inflation, all kinds of trend analysis, and we also give project updates on our YouTube channel. So very, very good resource, especially, you know, I've even found in working with advisors, they may be a specialist at single family, or they may be a specialist at trade platforms, but working in commercial real estate, it's a different nomenclature. So we're using different verbiage, we're using different standards as well. And a lot of people, even the advisors who are so smart, are getting great advice and training on our YouTube channel. We have over 150 YouTube channels. How to vet a real estate sponsor. You know, we should be asking that of the deals coming across our desk, because DL, have you ever declared bankruptcy? Wouldn't you want to know that? Mm-hmm. And we encourage asking the hard questions. No, not in 20 years. I couldn't sign on these big loans if I had declared bankruptcy. DL, how much money do you have in the deals? Well, I have $1 million right now. I have plenty of skin in the game. Have you ever lost investors' money? No, not in 20 years of commercial real estate. So I can honestly say I've never lost investors' money. And those are the kinds of hard questions we really want people to be asking. Even your clients, even your partners, ask us the hard questions. So here's our YouTube channel, honorsyoutube.com, and it's free to subscribe. And you can get market updates on Dallas and the submarket, and we have a video on 22 North in Northwest Austin, and that is our sister property, Northwest Austin. So we've got plenty of information to be knowing us, and we get to know you. So we mentioned some of our players, and then also Carrasco. I've known Mike Carrasco for 18 years and worked with him. He's a commercial mortgage broker and has a lot of development experience as well. We have a deep dive where we are talking about past development experience and how that ends up with our apartments in Dallas. Here's a brief look at the gorgeous apartments I took over. 16 doors, F crime rate, forced all of the crime out, you know, did that renovation and increased the rents. My rents were about 25% over market. We were always full with a wait list. REOs, bank-owned properties, and we worked on retail flips, big properties. This is part of that retail center in the middle of Plano as well. And then also portfolio evaluation, heavy industrial, planned developments, phase value engineering. So our asset is 22 North in Northwest Austin. And that was built on 11 acres, 240 Class A units, and it was recession proof. So during the pandemic, we actually only saw rent specials one time, which was great because it's recession proof. Our tenants are 30-something, they are building their career and just paying their rent. So that's what we saw during the recession. And Kat, you asked, how do we choose our properties? Well, asset class is number one. And so that's why we choose the recession-proof properties. Not that multifamily is my favorite, but everybody needs a place to live. So that's how we do that.
But 22. And forgive me, I'm not familiar with residential or multifamily as much as I am commercial, but is it really recession-proof? Because what if the economy flips and it becomes a buyer's market for homes? Because right now people can't buy a home.
Because of rates.
Yes. And so they are paying $4,000 a month for a luxury apartment because the banks won't approve them for a $2,000 a month mortgage on a starter home. So is it really?
So what if it does flip and we have a recession like a pandemic?
Correct.
And a rent moratorium.
If that flips and everybody becomes a buyer's market again.
But our 30-something tenants, good point, our 30-something tenants, they don't want to own a home.
Right.
They don't want to have they don't want to have the repairs.
Yes.
They don't want to have the overhead.
Luxury.
They want to have concierge.
You're right. You're right. I'm 47. I don't want that burden.
Yeah, exactly. They do want to just rent.
Can I get a discount?
Yes, they do want to rent, and they do want to have those concierge services as well. So it's our demographic too that helps us. The 30-something professional, they're just building their career.
I just asked a hard question to.
Exactly, yeah. It's a good question too, because we want to do the what if scenarios and say, what if that shifts? What if
there
the
are
market shifts?
Pessimists out there that would say nothing's recession proof, but But so how did you target that was a good point. That makes perfect sense.
Well, it was very clear during the pandemic, which is a great stress test, I thought. Came out to be a great stress test for commercial properties. So if we take a look at 22 North, we've talked about this a little bit, and we differentiate ourselves by ultra-conservative bank underwriting. We have our financials available. We leveraged the work, the civils, the architectural, the interior design from 22 North. This is an actual photo from 22 North. It's got pops of colors that the 30-something like, and we just leveraged all that into the Prestige in Dallas. So more actual pictures, 240 units, Class A++ on 11 acres. It was built in 2018 and sold for a profit of $22 million in 2021. So nothing to sneeze at, really. Very profitable asset class, plus we forced value from the ground up, and that has a lot of value, and then we sold the property. It brings us to the Prestige at Mayhill. So we closed Fund 1 oversubscribed. That was for entitlements, and then we opened Fund 3, which is for verticals, and we have about $8 million left to raise in private money for Fund 3. We've raised $2.5 million. And we could bring in another $8 million without paying too much. But we also have an equity position that we're looking for. We have a bridge position that we're looking for, and construction. So we're filling out the other parts of the capital stack with equity and construction. Right now it's a bridge opportunity. Now we're getting near the end here because we're talking about our next project, which is going into the FactRight platform, which is fantastic. They're very picky about the deals that they vet and that they bring into the platform, and they want to bring it in where a couple equity groups can fund it and just take it down. So our PPM is about ready. And like they say at FactRight, the city is vetting our deals. So with the apartments, with the condos, the city is vetting us. And that's a nice place to be. And then, we'll just place out PPM and put that into the FactRight platform. You're going to be seeing that in the next month or two. But think about this asset class. This is something that you're not going to see very often. It's mixed use. It's 50% condos to infuse capital into the project. So we've got condos that can bring $10 million of cash from pre-sales in Class A++ asset class, and also 55+ communities. So I like this tenant type. They don't party much, and they have a great value for their properties. They take care of their place. So that's a great asset class. And in our area, you can hardly find a 2x2 condo for sale. So we're going to infuse cash quickly with pre-sales, and then keep the bottom 30 units as Class A++ multifamily for the long-term cash flow and appreciation. It's a mixed use situation that you don't see, but it's phenomenally smart. If you have condos and you sell all the condos, then all you get is the HOA fees. You really don't get a lot of cash flow after that. So we get the HOA fees from the condos, and we get the appreciation from the building, but we also have the multifamily on the bottom to have cash flow and appreciation. It's phenomenal. Don't tell anybody.
I'm still
I love it.
Concept. I still have questions. I won't take up everybody's time with my questions. I can do that on the Zoom, but I have questions. I understand your concept, but I just have my brain's working in overtime because I've never heard the concept before.
Exactly. I saw, actually, coming back from FactRight in Nashville, I was sitting next to a developer's daughter, and that's when I found out about this mixed-use situation, because he was keeping track of his college-age daughter with that, living in a condo, and they had a mixed-use property. And I thought about that, and I thought that's phenomenal in terms of immediate cash flow, and then long-term cash flow and long-term appreciation as well.
The units look similar,
Yes.
but there's some that are owned and some that are rented, right? Mixed
Yes.
use. So the
So
rental will
And but
generate-
they're all the same
That's
build.
right. So you can't tell like this is a rental unit. That's a
No, it'll be, the top ones will be condos.
Okay.
And then the bottom ones will be multifamily.
okay.
So the nicer views on the top with the condos, but you won't be able to tell the difference. It'll all be 2x2s.
That's very
So
interesting.
I'm
All
excited.
alone, the bottom's going to turn and continue to generate
So
income.
it's not.
Yeah, it will. But again, our tenants stay 5 to 6 years.
Or I guess instead of just churning, because you will have some churning.
They will churn.
It's not churn proof, but you also still have the rents versus the condo. You get it up front, and then you just have HOA. So it's constant sort. The bottom's the source of income. The top is stabilized.
Stabilized,
So it's
yeah.
almost genius.
Exactly. Don't tell anybody.
I was trying to think of a better word.
Exactly.
But
Yeah.
it almost is.
It is very good.
Because if
Plus
you
you
went to
can-
any lender with that to get a refi loan, it's foolproof.
Yes.
Kudos.
You get that appreciation as well.
Normally I can pick something apart very easily, and that one just
So think about your retail investors as well, or think about the equity investors. They would get part of that cash infusion as well. Someone would share that profit with them as well. So they get repaid pretty quickly. I love it. So we'll do more of these, but that's why I'm so excited about these condos.
to watch now.
Right. Yeah, it's a lot. Yes.
So just to introduce you to a couple other key players that are very seasoned. Architect Brad Blazer, who has raised $2 billion, over $2 billion in capital markets. General contractor, one of the best general contractors in the state of Texas, and they're also HUD certified. Our design team, and we met them at one of the conferences at Jaboy in Dallas, and we also have a dine around coming up at the Dallas Jaboy. I think it's the 29th on a Friday that we're going to have a dine around in Dallas. If y'all can come to that, you're welcome to. We leverage all of the design from 22 North. I told them whatever we did in 22 North, I don't want to make a different decision. Right. That's what we did. Development project manager who's helping with all of the validation of the construction documents. And then we have all of our consultants have university degrees, our support staff, finance degrees. We just got a couple new people who used to work at Citibank, very good degreed people. So I think we talked a little bit about why multifamily, but we also have to realize, just like Kat said, that it can turn, or if it's a Class C or a Class B conversion, the margins are so slim that they're having capital calls and investors are not getting paid out. I mean, it's probably lending to deal fatigue from the advisors and from the lenders, where these conversions have been overpaid for. There's no more appreciation. It's triply appreciated, and then they buy it anyway. It can only depreciate. So the margins for making any money on a Class C or Class B conversion, very slim, even in a strong market like Dallas. So that's why we're seeing a lot of defaults, and we will continue to see defaults from the syndicators as well. Also, the rents are flat in those properties. So they have a little bit of profit and there's nothing to share. That's why you're only getting an equity multiple of 1.1, 1.5, maybe 2 that you're seeing in these properties. But we're giving up to a 3 times return because we've got our development appreciation we forced, and also this asset class has more profit and we're sharing. I think we're sharing more. So for those reasons, we have to be careful about the asset class that we're talking about. And Texas, we've got some people who are out of town. All of Texas is not the same. We've got Houston, which is very soft. Houston has been soft in commercial for over 2 years. Austin has been soft for almost a year. But Dallas is a stellar market, and we're just blessed to be working in Dallas. Dallas hasn't gone soft yet. And when it does, it'll go soft for 6 months. It'll on the bell curve. It'll go soft for 6 months, and then it'll pop back. So the best market in Texas as well. It's phenomenal. We have the highest rents over all of the markets in Texas. We have the highest paying jobs, even over Austin. It's phenomenal.
I was gonna say, even over Austin?
I know, it surprised me.
Yeah.
I'm not disagreeing. I'm just saying because Austin is historically known for having the highest rents. You can't buy in those markets.
And then I heard technology.
Yeah, and it's actually better than Austin.
Yes.
So, yeah, it's something that it'll make your head spin a little bit, but the higher rents than Austin and higher paying wages than Austin as well in terms of professional wages.
So DL, do you think technologies companies are driving into Austin and Dallas area? Because I see a lot of movement from even Goldman Sachs has the biggest CEOs moving from New York to Dallas.
A lot of regional and national corporations are moving to Dallas. PGA, Wells Fargo. Yeah, a lot of corporations are moving into revitalized downtown Dallas, into Southlake, into Plano. And so our property is in the middle of Dallas, and our tenants can work all three of the job markets. 30 miles to Plano, 30 miles to Southlake, 30 miles to revitalize downtown Dallas. So we're hitting 3 job markets, and we're going to fill up fast. And you should see the construction on the roads. The 35 is being expanded at the 121, and it's all kinds of expansion down the 35 south as well, to all the way to the 20. And on the north side of Dallas, up at the 380, they have already developed a 480 or whatever they're going to call it, but it's all the way to Savannah, Prosper, and then they're going to connect it. In fact, across the street from us, the city has put millions of dollars in infrastructure. There's an overpass, and Mundo, you saw that when you visited the process. There's a big overpass. We had 35 million vehicles per year cross by our property, and now they're using that Mayhill even more to get from the 380 to the 35 and back and forth. So it's incredible growth. It's it's the right side of the balance sheet.
And their other asset is there's a train.
A train, right?
That goes right next to the property, and they're going to be decommissioning the horn. So that's not going to impact the residents at the site as well. So there's a lot of diversity and ways of moving back and forth through to their job site. Vehicular traffic, trains, things of that nature.
Yeah, it's incredible. It's good. We're blessed. So we're going to wrap up. I know that it's getting a little bit late, but we'll be available for questions, and we can jump on a Zoom next week for anything. 22 North in Northwest Austin was our testament. It was built a little bit ahead of the curve, 30 miles from downtown Austin, and it took a little bit of time to fill up. But we're hitting 3 job markets in our Dallas location, not just one job market, so we'll fill up fast. The other thing that I kept hearing, which is accurate, is there's not a lot of new starts with developments. So we're running to meet the demand right now for multifamily, and in a year and a half, when these units hit the market and we start pre-leasing, we're going to have another big gap, so it's perfect timing for these apartments and condos.
How much do you, what percentage do you lease and pre-leasing? Just
What's that?
Curiosity. I'm just asking curiosity.
I didn't hear your question.
What percentage do you fill the property at pre-leasing? Which are just...
Our break even?
Ballpark.
30%.
That's awesome.
Mm-hmm. Yeah. So we're excited. We're excited. I'm glad to be able to share this with you a little bit. And we have a full Dropbox for advisors, for lenders, and those kind of things. You know, as engineers and planners, we probably have too much in the Dropbox. There's approvals, reports, all of the plans as well. But, you know, it's there if you guys want to look at it. So we're going to go ahead and wrap up. Thank you guys for coming.
Thank you very much.
Oh, thank you. It was a good group too.
It was a good group too, yes. I'm so grateful.
After a lifetime of hard work and dedication, it's time to enjoy the fruits of your labor. As you enter into retirement, securing your nest egg and preserving your financial future becomes paramount. Not only sheltering, but safely multiplying your returns in a hard asset, which does not walk away. You can drive by it anytime. Introducing The Prestige, your trustworthy, vetted partner in commercial real estate investing. We understand that you seek less risk, financial security, and a reliable source of income. With over 400 years of combined experience and proven track records, The Prestige is your beacon of trust. We specialize in providing safe and secure investment opportunities tailored to your retirement goals. We know that you need to rely on experts to navigate the complexities of the market. That's why our team of seasoned experts is here to guide you every step of the way. Our collateral contracts have been approved 10 plus times by Quest IRA, which is under the SEC. Here are just a few of our client testimonials. Wow, DL, this is so exciting. I'm so happy for you and for us. Very exciting. Love the floor plans. We've got our distribution pending in our bank account. Thanks so much, DL. DL, we can set our watch to your distributions. Never missed a payment. Don't compromise on your retirement dreams. Visit The Prestige at mayhill.com today for our current and rare investment opportunities. And let us utilize our 400 plus years of experience to safeguard your nest egg and provide you with a secure investment in a low yield market. We are owner operators with daily hands-on on-site responsibilities. We are not syndicators. DL began in commercial real estate in 2005 and is one of the top seasoned leaders in investing and developing in Southern California and Dallas, Texas. And there is no slowing down. The Prestige, your trusted partner in commercial real estate investing for retirees.